Cap rates. You hear about them all the time in multifamily and commercial real estate investing, but very few truly understand what a cap rate is. And if you're a beginner, it may seem like you need a degree in finance to really understand what a cap rate is. And if you may know, or you may think you know what a cap rate is, I'm here to tell you a truth that you may miss out on. Okay, and the truth is this. The truth is every deal has two cap rates. Yes, two. Okay. Now, if you can understand the differences between the two cap rates, it's going to unlock way more profitable deals for you. And probably the most important part of this video is going to help you avoid making costly mistakes. So in this video, I'm going to simplify the explanation of cap rates for you by revealing to you what the two cap rates are. I'm going to use real world examples, and by the end of this video, if you can understand the one principle here, the ultimate goal, okay, it's going to be to put you in a position to buy deals below market value. Got it? All right, you excited about cap rates today? I am. Let's get started. All right, before we start, I want to share with you, just as I promised, Cap Rates 101, or the ABCs of cap rate. Okay, a cap rate is return on investment if you paid all cash. Okay, so let's say you have an investment property here and you wrote a check for it. Okay, whatever that amount you wrote a check for, what is the return on investment on that check that you wrote? That's what a cap rate is. Okay, next, it's called an unleveraged return on investment. Unleveraged means there was no leverage. You didn't put down 25%. There was no leverage. You paid all cash. Again, what is the return on investment if you paid all cash? Okay, all right. And then the next, the third one is the cap rate is a percentage of property value expected to earn each year without considering a mortgage. Okay, so can you see the common theme here? There's no mortgage involved in calculating your cap rate. Okay, if you want to use your mortgage and calculate an ROI, that's what we call a cash on cash return. Completely different. Okay, we'll do that next, but that is what a cap rate. Now, why is it important to understand what a cap rate is? Okay, number one, it's a quick way to compare the profitability of commercial properties. Okay, so if you are in the market to buy a commercial property, let's say this commercial property is valued here, right? And you want to buy the one next to it. Do you want to pay this much? You don't. So you want to understand what the cap rate is for this one to make sure you don't overpay. Okay. Number two, it helps investors just like you assess the potential return on investment of an investment property. Okay. And number three, it is absolutely critical that you must learn what the cap rate is, because it must be learned to make informed investment decisions. Okay, so do not invest in any multifamily property or commercial property until you understand what a cap rate is. And more importantly, understand what the two cap rates are, which we're going to do next. Got questions? Simply text the word Peter to 833-942-4516 and we'll help you. Welcome back, future multifamily millionaires. Let's get started here with the two cap rates. Once you understand this concept, it will fundamentally change how you evaluate any future multifamily and commercial real estate deal. The two cap rates are deal cap rate and market cap rate. Okay, the deal cap rate is what you're most familiar with. Okay, that is deal specific. Okay, I'll keep it very simple for you. The deal cap rate, the formula for it, the deal cap rate equals the net operating income divided by the sales price. Okay, and for those of you that don't know what the NOI is, the NOI is the income minus the operating expenses equals the NOI. Okay, so we take that number and we divide it by whatever sales price or price you're going to buy it for. Okay, so do that math. Let's say, for example, we have a 10-unit apartment building, and we find out that the net operating income for the year is $50,000, and we're going to divide it by the purchase price, $1 million. So 50,000 divided by $1 million is 5%. Okay, that is the deal cap rate. Okay, you've seen this before. Okay, in brochures, online. This is the deal cap rate. Okay, but it does not tell the whole story. It does not. Most of you will make a buying decision based upon this number, and that's an awful thing to do. Very short-sighted. Okay. Now, since this deal cap rate is at 5%, is this a good deal? Who knows? Okay, who knows? It must be compared to something. Okay, compared to what? It must be compared to the market cap rate. Okay, the deal cap rate must be compared to the market cap rate to make the most informed decision. Let me give an example. Here's the definition of a market cap rate. The market cap rate is the average deal cap rate of similar recently sold properties in the same market. Here's an example. Let's say on a certain street or certain neighborhood, we have property A. When that sold within the last few months, that their deal cap rate for that deal was 4.8%. Property B, another one that sold, similar to neighborhood, sold at 5%. And property C, down the street from one of these two, the deal cap rate for this sold property is 5.2%. So we take the average of these three, and that equals 5%. So the market cap rate, okay, in this area, based upon these three recently sold properties in the same area, the average is 5%. So the market cap rate is 5%. Got it? Okay. So deal cap rate, market cap rate. Here's what's next. Okay. I just established with you that every deal has two cap rates, right? You understand this. Okay. Now, here's the next thing. What is the ultimate goal? Okay. What do you do with the deal cap rate and the market cap rate? That is going to be life-changing for you and what I'm going to do next. Every successful commercial real estate investor has a mentor. Get mentored by me and my team by applying to be our next protege. Click the top corner. All right, here is the ultimate goal now that you really understand what a deal cap rate is and what a market cap rate is. Here's the goal. The goal is you want to find a deal where your deal cap rate is greater than your market cap rate. Okay, let's say that you have a particular area in your city that you want to buy a multifamily property. What you should do is understand what the market cap rate is. Okay, and I just share with you how to get that. So once you understand what the market cap rate is, your goal is to find a deal where the deal cap rate is greater than the market cap rate. Got it? Okay, that is the ultimate goal, because if you can do that, guess what happens? Okay, that means you're buying below market. Isn't that what we all want? We want, how do you define a good deal? Buying it below market. We don't want to pay above market, right? Secondly, which is really important, okay, for your ROI, is if you can have a deal, your deal cap rate greater than market cap rate, you're walking into instant equity, okay? And you're going to have a greater ROI, and subsequently, you're going to have greater cash flow. Let me give you a quick example, okay? If you recall, a few minutes ago, we talked about a 10-unit property that was $1 million and it had a $50,000 NOI. Remember that? Okay, and that on that deal, the deal cap rate is 5%, and we also averaged out the market cap rate to be 5% as well. Okay, so remember, your goal is to have your deal cap rate greater than your market cap rate. So once you know these two, what the deal cap rate is, the market cap rate, all right, your question is, how much do I offer? What you want to do to achieve this formula here is to offer a lower price than $1 million. Okay, so as an example, I'm going to offer $900,000. Look and see how this math works. Okay, here's the deal cap rate formula. If you recall from a few minutes ago, it's the NOI divided by the market cap rate. I have the same NOI in this 10 unit at $50,000, but now I'm changing the price to $900,000. Okay, so 50,000 divided by 900,000 is 5.55%. Okay, all right. So if I get this deal accepted, okay, I'm buying it below market. I'm walking in with an instant equity of $100,000. I'm buying it at 900,000, but it's worth $1 million. Okay, and subsequently I'm going to have higher cash flow because I'm going to borrow less money, right? So my mortgage payments will be less, boosting up my cash flow and my total ROI. Okay, cap rate and cash and cash return go up because you offered something lower. Okay, so this deal right here is the equivalent of your deal cap rate, okay, 5.55% greater than your market cap rate, which was 5%. Okay, that's what you want. Okay, so that is the ultimate goal. What does that buy you? Well, now that, so just the power of knowing the difference between the deal cap rate and market cap rate, look what you just did. Okay, so it's your competitive advantage to understand the difference. It really is, because a real estate agent or seller, they are not going to voluntarily tell you that there are two cap rates and what to do with them. Okay, they're not. This is your competitive advantage. Okay, so you now have a new pair of deal goggles. Okay, deal goggles to look through. So from now on, any deal you look at, any multifamily, any commercial deal, put those new deal goggles on and look for, calculate the deal cap rate, and then get the market cap rate, compare the two, and then when you want to see what offer to make sure your deal cap rate that you end up with, because you're going to offer a lower price, is greater than your market cap rate. Okay, got it? All right, so hope you got it now. What I want you to do is to put in the comments your biggest takeaway from this, okay? So there you have it. This is the truth about cap rates. There are two cap rates, okay? There really are. A deal cap rate, market cap rate. The more you know the difference, the better the deals that you can do. Got it? Do me a favor, go ahead and like the video, subscribe to our channel so we can send you more videos just like this. Thank you so much, and I'll see you at the next video. Ever wondered how pro investors find and analyze deals for maximum profit? How to secure financing even if you're a beginner? Or attract and keep tenants for steady passive income? Commercial Real Estate for Beginners delivers simple, actionable steps to master it all. Tap the link on the top corner for your free copy today.